where investors are digesting a slew of headlines, everything from fresh earnings to the latest trade talks. Joining me now for more on this is Jay Woods. He's the Chief Market Strategist at Freedom Capital Markets. Jay, welcome to the show.
Good to be here. Happy Halloween.
Happy Halloween. Love the festive color and the tie.
We try.
So welcome to the show. A lot is going on this week.
Yep.
The Fed cut 25 basis points. Jerome Powell signaling that we may not see a second rate cut in December. What is your take?
Yeah, I think that was the big take. In fact, the panel had two dissensions. One for more cuts, one for no cuts. So to me, the story is we're unsure. Jerome Powell telegraphed that. He said it is not a foregone conclusion, far from his words, that we are going to cut in December. And one of the reasons is this government shutdown continues. It has not had an impact on the market yet. But if we go through this weekend into next week, this could cause a problem. You have a lot of people not receiving money. This is going to grow louder, the chorus against the administration and the finger pointing, but the impact on GDP will be felt as we go forward. So to me, this is an impact. And then the data that the Fed wants, we're relying on surveys. He's talked about the Beige Book. The Beige Book is a survey of different regional economies, not the overall economy. And surveys, you never know what you're getting back. With the CPI, the PPI, and then the Fed's preferred inflation gauge, the PCE, which was supposed to come out today, by the way, we don't have the data that they like to look at when making decisions. So he did a good job. He said the available data is telling us that this was the right decision at the time, but not a foregone conclusion. The second that came out of his mouth, the S&P 500 sold off about 1% from where it was trading at that time. Now we're focused on some good earnings, which we can talk about. But I think next week, as we've gotten over the major hump of the majority of stocks reporting earnings, we're going to focus more on economic policy. And you said 70% chance of a cut in December. I was surprised it was that high. I think it's less than a coin flip that we cut in December based on what Powell said.
And I understand November and December, historically good months for the market. Do you think if the government shutdown continues, it can impact that record?
Yeah, well, we're up 6 months in a row. Longest streak since 2021, which was a heck of a year for this market. That was 7 months. So we've had a nice run. I thought we were going to digest in those seasonally weaker months of August, September. We'll see what November brings. But yes, to your point, November through May is the beginning of the best 6 months of the year. That's just statistically true that these months are where we see people, in this case, November, December, chase performance, try to get into those winners. So I think we're going to do fine. The earnings growth continues to be there. And if we are on that trajectory, yeah, November and December should continue to take us to new highs. But the run we've gone on, given all the headlines, is a little head-scratching. So if we get a little bit of a pullback, I think it'll be temporary and one that investors are still going to buy because I still think we have strong momentum going into 2026.
And let's talk trade. President Donald Trump just met with Xi Jinping.
Yeah.
How is that impacting the markets?
First of all, you say that name so easily. I can never say Xi Jinping. It just does not roll off the tongue. How will it affect markets? It didn't. We were hoping for more of a hammered out deal. It became more of that taco trade where he backed down on certain things. We didn't really get anything out of it. What we got is, okay, we have good relations with China. We're going to meet with them again. One trip to China. China is going to come to us. So at least the rhetoric has died down, but any strong resolution that's going to give us guidance as to how these companies are going to be able to invest in China, nothing on chips. That was something that people wanted to see. So to me, it was good that the rhetoric has died down, but as far as looking for resolution and more open trade with the Chinese, it didn't give us much of anything.
We also saw multiple Mag 7 companies report earnings this week, Apple and Amazon yesterday after the market closed. What is your take on that?
I love this. Yeah, 5 of the Mag 7 reported. 2 of them were breaking out. So as a technician, I'm looking, how is price going into these earnings? We had Meta and Microsoft had new all-time highs last quarter, and they never got back to those levels. And then when they had earnings, they both disappointed. Meta has me a little concerned. I'm watching that 200-day moving average. Something has changed there. The story had been CapEx spend, and these companies were rewarded for spending money. Well, okay, you're spending money still, and now all of a sudden that narrative has changed. Where are the results? The results were Amazon AWS, the cloud. That stock finally broke out. So we're seeing rotation in the Mag 7. Amazon looks fantastic. Broke out on a gap above 240. We'll see when it officially opens in a little while. That looks like it has momentum, and that's where the rotation should be. So if you're not in Amazon, I think you want to chase this stock. Any pullback to 240 should be a golden opportunity to buy it. You talk Google, you talk Apple. Apple has become more of a staple of our lives, a utility. Their revenue just keeps cranking. Still no AI story, but no one cares. They keep just hitting on all cylinders without spending as much as some of their competitors do. So to me, the Mag 7, we see rotation there. Meta, Microsoft are on the sidelines for a little while, but the wind at the sails of Google, Apple, and Amazon, to me, that's fantastic. And then we'll talk about Tesla in a couple weeks. That pay package, November 6th, the vote comes up. If there's an issue with Elon Musk and he decides, you know what, I may be done, then Tesla stock should be in a little bit of a perilous time. We'll talk about that as we get closer, though.
What's your outlook for the rest of the year?
The outlook for the rest of the year, I'm still positive. I still think there's a little more juice to be squeezed out of this orange. Yes, yes, I'm in theme for that line, but I like the broadening aspect of things. I like the small caps. If rates can stay stable, we get one more cut, they'll continue to go higher. I want to see transport to some of those lagging sectors continue to do well. When you talk small caps, you talk regional banks, which we've talked about before, and biotech. There's been a lot of M&A in that sector, and the stocks that have been beaten down are starting to turn around. So people may look for opportunities. That's where they may go. But the Mag 7 names, I think you're going to see some churn within the 7, and it's not going to be the catalyst that will continue to lead us. And I think we'll see some catch up from some of the names that have beaten down. And if that happens, it may not put the S&P well over 7,000. I think we'll touch it at one point. Will we close there? That'll be the question in the next few weeks. And then Fed policy. They don't cut. The rhetoric could get very loud. There's been dissension in the Fed, and that may put this rally on pause to the end of the year. So the highs, I don't think they're in just yet, but I think we're close to them. And then we'll talk about 2026 on another show when I come back.
Are you following anything right now, Jay, that might be a little bit under the radar that you think is going to make a big splash? Like, what sectors are you looking at?
Yeah, I mentioned biotech. I did a deeper dive with my team looking at some of these stocks. People don't realize the biotech ETF, the IBB, is the one I track, is up 25% year to date and is on a tremendous uptrend. It still has a long way to go to get back to highs. We've seen M&A where some of these bigger companies, Pfizer's and Merck's that trade right behind us, are looking for dance partners to find that next big drug. I continue to think that that will be where we go. And then when you look at headwinds, well, the administration is trying to fast track a lot of these drugs. If we can get some of these drugs, a Sarepta, an SRPT is a stock that I was looking at technically, it's down 81% for the year, but technically, it looks like it wants to reverse. They're waiting on one FDA, decision about one of their drugs, and one that I can't pronounce, but it deals with muscular dystrophy. They've had some headwinds there. That's an example of a stock that can turn around. Biogen, another one. So I think I want to look at some of the healthcare stocks, and healthcare, a beaten down sector that could reverse. So that's what I'm looking at. Am I going all in these names and pounding the table? We have to be there. No, I still think technology leads, but the leadership in technology is rotating within it. So we'll keep an eye on that. And Cloudflare, another stock that's up 8% this morning. NET, the symbol there, trades down here. Stacey Cunningham on the board. I like that one too.
All right, Jay Woods, thank you so much for joining us. We are going to go to the boardroom. Amira is at NYSE to celebrate